So the A200 is basically an Australian exchange traded fund. And it basically tracks the performance of the index. So this index would be the top 200 companies by market capitalization. So this means that it basically tracks with one share, so with one A200 share in the ASX, it tracks basically the 200 biggest companies by market capitalization in the ASX, so the Australian exchange. So this means that with a single trade, you get exposure to the 200 top companies in Australia. So as you can see here in their website, you see that basically they say that in one trade you get exposure to the 200 largest companies on the ASX at an ultra low management fee of just 7% per annum. So this means that basically if you have, let's say, $10,000 invested, you pay basically $7. And down here, they claim that with an annual management fees of only 7% per annum, A200 is the world lowest cost Australian share ETF. And I think that's a very good point. So this is one of the reasons why I'm going to start buying A200s, because of this extremely low fee. So one of these competitors would be the VAS. So that's the Vanguard Australian Shares Index, ETF. And if you see down here, basically the management fee is a little bit higher, so 0.03% higher. And one of the differences is that VAS seeks to track the return of the ASX 300. So if you compare with the A200, which tracks the top 200 by market capitalization, the VAS tracks the index of the 300 companies. So in essence, basically you have the A200, which is very similar to the VAS, but with lower fees. And they've been very vocal that this fee will stay low. So the chances of them increasing the fee are very low. So there's really no real disadvantage in going for A200 versus the VAS. They basically track kind of the same thing, and one has lower fees than the other. So what might be more interesting to compare is with the VDHG, so the Vanguard High Growth, which not only tracks Australian stocks but also tracks international stocks. I've done a video a few weeks ago about it. But in essence, the VDHG is a little bit more diversified. So the A200 obviously tracks only Australian stocks, where the VDHG tracks also international stocks. So if you just, to remind you, like, this is the allocation of the VDHG. So you can see that indeed the biggest percentage is the Australian shares index fund with 36.4. But then you can see that a little bit more than a quarter, is international shares, and international shares fund another 15%. Global aggregate bond index fund, international shares smart index company, small companies index fund, emerging markets, industrial fixed interest. So yeah, basically you only have like 36, so a third of the fund seems, or a bit more than a third, though this seems to be in Australia and the others are abroad, meaning that if you invest in VDHG, you have a little bit more diversification abroad, whereas if you invest in A200, you're basically limited to Australian shares and the Australian market, which is arguably much smaller than the global market. So in terms of the distribution, they are very similar, all these funds. So they have quarterly distribution frequency, but here is the big difference. So franking level is 76.3% with the A200. So this is much higher than the VDHG, because obviously VDHG is international, so not all companies are Australian, and therefore there's no franking credits. So if you're interested in dividends, perhaps makes some sense to invest in Australian companies because of the franking credits. I've covered what franking credits are last week, so if you want a reminder, you can check my video on that. It's very straightforward to understand. Basically, franking credit is like a credit that you get in the ATO, And it's basically 30%. So if your tax rate is lower than that, then the government will give you some money. If your tax percentage is higher, you basically get 30% off the tax that you pay on the dividends. So if you're an Australian citizen, or if you're a permanent resident in Australia, then it makes sense to be aware of these franking credits, because otherwise you're gonna be paying tax on the dividends, full tax, rather than having franking credits. So the A200 is also used in the third strategy by this famous Aussie firebug. So he's changed his investment plan a few times, and his current plan is to go with A200 and two other LICs, so listed investment companies, which I will cover at the later stage. I'll leave a link to the blog post that I found quite interesting, and the podcast, so you can hear his thoughts on why he's gonna be investing with A200 and two LICs, rather than, I think one of his first plans was to go into real estate, so have, I think, 10 properties. He's now looking to tap into the dividends for, the FIRE movement, financial independence, retire early, which is really interesting. And if you're interested in those topics, definitely watch his podcast. But the topic is basically this one. So ETF versus LICs and strategy 3 revisited. And he says here that Buffett, it was quoted saying, consistent buy an S&P 500 low-cost index fund. I think it's the thing that makes the most sense practically all of the time. And many people have been saying that. Many people have been saying that the most sustainable way to build wealth is to invest in an index fund rather than playing lottery and picking stocks. Yes, you can get lucky. You could have bought Tesla last year or a couple of years ago, and then you could have get manifold return. But at the same time, you could have lost all the money. I think Elon Musk even said to his family and friends not to invest in Tesla because they were, I think, 2-3 days from going bankrupt. So it's a lot riskier. And of course, it depends on your risk aversion. If you are not afraid of taking risks, or if you have capital that you can play around, then yeah, you could try. I mean, this is not financial advice, obviously, but it's up to you to decide. But there's many studies out there that say that the market goes up. There's some time frame of period where the market has never been down. I think is 10 or 20 years, whereas in any time in history between this period, the market never been down. So the market is constantly, in the long term, the market is going up. So of course, buying into an index fund, you remove a lot of the risks versus going for individual stocks or even listed listed investment companies, these so-called LICs. Of course, with anything you do, you need to do your own research. You need to read as much as you can and not just trust some person on the internet telling you to buy X or Y. For me, I think I will start investing in the A200 because I plan to stay in Australia. I'm a taxpayer here, so I do like the idea of the franking credits, and I do believe that Australia will come out of this economic recession on top. And now that I've lived in many countries, I really think that Australia is one of the best countries in the world, so I'm definitely interested in investing more in Australian companies, and A200 seems a good way to get started. Since I've been investing in the Vanguard High Growth, I think I kind of want to invest a little bit more in the Australian market. So perhaps starting next year, I will stop investing in the Vanguard High Growth and start investing in the A200. I'll be interested to know what you think of this strategy. Do you think it's too risky to invest only in the Australian index fund, or probably not risky enough? I'll probably still, now that I think about it, maybe I could still continue investing a little bit in the Vanguard High Growth a little bit in the A200 and probably play around with a small percentage, I guess, maybe 10% of the money I plan to put every month into the stock market in individual stocks. So I'm a big fan of green energy, and I think Australia has a great potential to be a leading provider of green energy. So solar energy, for example, I think it could be massive down here. So I've been thinking of doing some research, and let me know if you're interested in hearing about this, some research on green energy companies in Australia, because I do see a lot of potential here for that kind of energy, because there's so much desert. So Australia, I think, would be a great place for installing solar panels. And I don't know if you know, but FMG has committed over 1 billion to its Fortescue future industry business, which is aiming to promote 235 gigawatts of renewable energy generation to support green hydrogen, ammonia, and metal production. So, for example, you can see that Fortescue to take on fossil fuel giants with expansion into green energy. So this is one of the biggest mining companies in Australia, and they want to move into green energy. So probably that's a reason why we saw quite a big bump in their stock a few days ago, one of the highest since I believe 2016. So it was about 13% rise. I'm not sure if it was connected with this news or not, but my point is that green energy, I think, is a future. Elon Musk has very heavily betted on that, because as he says, there's no other way, right? Even the name sustainable energy means that if you have other kinds of energy, they're not sustainable. So either he says that you either just consume all the energy and then die, or you have no other option but to find a sustainable source of energy. So I truly believe in that. The electric cars are becoming more and more popular. Elon Musk says that in the few years, most houses are going to be able to be powered by solar energy with these solar roofs and so on. So I think the revolution has started, and I think Australia has such a great potential to lead the world in renewable energies. And another thing that I've also interested is ethical food production. So I know that here in Australia, people are very heavy meat consumers, but I've been a vegetarian for a while, and I do believe that the future is kind of moving towards not animal protein, but protein from vegetables, and even producing, let's say, protein in the labs. So that's a trend that is gaining a lot of traction now in the European Union and in some other countries. So I do feel that the future is also going to be moving a little bit towards that way. So meat replacements, I understand it might take a while, but I do see the future being a little more green, because even meat production is kind of, uses a lot of energy. So if we're moving towards more a green world, then definitely we need to find ways to produce food more sustainably. So that's another area of interest. But yeah, just let me know what you think. I really like this idea of investing in the A200, this index fund of Australian companies, frank dividends and exposure to Australian companies, which I believe this is a great country, and I see a bright future for Australia. But I'll be interested to hear your thoughts and what you think about this green energy or sustainable food production as well, or if you know other industries that you see a lot of potential. I'll be really interested in discussing that with you. So that'll be all from me. Thanks for watching, and I'll see you on the next one. Bye.